Well, now we can see why Warren Buffett started selling stocks as early as November, selling off, I think it was Apple and several stocks, because obviously the man knew something was going to go down. So let's check out and see what it was. Well, according to Barron's, we know now why Warren Buffett has been selling stocks. Warren Buffett is selling Bank of America and Citigroup. He also sold Apple and a bunch of other stocks. So I think he had an inclination that the stock market would have a correction. Now, the one thing we do know is the market isn't rational, people aren't rational, and the media is definitely not rational. Let's look at the headlines that the media is feeding us about this situation and what that means for you and me. Well, basically, it's like this. If you look at what they're putting here, they're saying things like, stocks plummet, prices will go up from tariffs, Trump's first 100 days, blah, blah, blah. Market slides, reacts to Trump's tariffs. That's not too bad. There's one in here that says Trump's Armageddon. Let's see if we can find it. Yeah, here we go. Economic Armageddon. I think they're slightly exaggerating. A $6.4 trillion loss in the markets. Yeah, okay, it's a big number. But in proportion to how many trillions, so that's important. Let's price them around 5, maybe 10%. We'll find out in a moment. Stocks plummet. Trump's cell phone market dives, an entirely predictable failed tariff plan. It's only been 3 or 4 days, so I don't know why they're talking about failed. You can't determine something's been failed until you give it an opportunity. But anyway, the media, they're embellishing, they're trying to sell, get your attention, scare the shit out of everybody. And that's really not very fair because the average Joe doesn't actually understand how this stuff works. So let's look at the last time we actually had a market crisis and what that looked like for real, the real deal, right? Something like this is what it was like. In 1929, we had a 90% drop in the market, not a 9%, and some are arguing only a 5%. So whatever that figure might be. And I'll back it up where I saw the 5%. We'll see here in 87, we had a 22% drop, which was significant. And then we had the dot-com bubble drop, which I remember, that was a 78% drop. That was really kind of a big deal, almost as much as the Great Depression in proportion. And then 2008, I remember really well, the financial crisis when we had the meltdown with Lehman Brothers, Bear Stearns. Remember that? Yeah. That was 57%. Then the pandemic, we had about a 34% drop in the market, and now they're saying we have a 9%. But if we look over here at what Grok is saying, Grok is telling us it's only 5%, which I find interesting. So I don't know where Grok's getting its information, but you're going to see here in just a moment. April 4th, 2025, Trump tariff announcement fallout, 5.5%. So whether it's 5.5% or 9%, who knows? Your guess is as good as mine. It's probably somewhere in the middle is probably the real figure. But I guess today the Japanese Nikkei has dropped 8%. And the European markets are down about 5 or 6% as well. So yeah, it's not a good thing for investors today, but I would say this, it's not like the end of the world, it's not Armageddon. And of course, there's gonna be some adjustments, and this is part of the adjustments. I don't believe tariffs are a good thing long term. I did say in one of my other videos that they're a tool that could be used to readjust things and realign the global markets. So they could be useful if they're used wisely and correctly. We'll see. We'll find out, won't we? Because there's not a lot you or me can do to change things, can we? So anyway, business leaders, if you got value from this, follow me.